Good morning, everybody, and happy Tuesday. Our first in-house team meeting, and thank you all for coming on a beautiful day. We got a great lineup as well. Happy New Year. I hope everybody had a great Christmas and New Year's and holiday and ate lots of chocolate. Now you have your goal setting that's going to happen. We're going to talk about that today as well. But we've got a couple people here, Christina Stafford, home staging consulting. And then we got Ken Pazder, our real estate lawyer, that's going to come in and talk about what, Doug, is the home flipping tax?
Yes.
And maybe some other taxes. I bumped into Christina. You called me, right?
Yeah.
Yeah,
On Instagram.
Yeah, you called me on Instagram. I answered on Instagram, and she came in, and I was really impressed. She's done business with Rihanna. She's done business with Chantel, and that's what got her in the door. So if you guys know of great service providers, home stagers, painters, plumbers, anything that's real estate related that's of value to you and your team, just introduce them to Doug and I. We'd love to have them come in. But like I said, I had Atlas came into the office yesterday just as a coincidence, and she's getting a listing that she had someone come into one of her open houses. So they did a listing presentation. They're getting a listing presentation, and she might be calling you because the house needs some work. And why you guys have to be the bad people and tell everybody to paint their walls and clean up and it stinks and stuff like that. If that's the case, hey, Robbie. But let her be the bad person, right? That's what your job. You're not a lawyer. You're not an accountant. So don't step into that circle. If she does this all the time and redesigns and stages and whatnot, let her give the advice because she's probably going to see things that we all don't see in our day to day. So I think this is really good timing. Atlas, you hear me. You're going to be giving her a call, I promise. So, Christina, thank you for coming in.
Thank you very much.
And I'll leave it up to you. And then we're going to have a follow up with Ken.
Awesome.
So give her a hand.
Thanks everyone for joining me today. I'm excited to share with you how home staging can enhance your listings and drive faster sales. As you can see, this staged living room with its neutral tones, modern decor, and soft lighting creates a welcoming environment that helps buyers feel at home. Staging isn't just about looks, it's about highlighting the property's best features and helping buyers picture themselves there. In the next 10 minutes, let's explore simple tips to elevate your listings and to stand out in a competitive market. First impressions are crucial when selling a home. The goal is to create an emotional connection that captivates the buyers. Starting with curb appeal, a fresh coat of paint on the front door, updated house numbers, and tidy landscaping can make the exterior more inviting. Inside, focus on decluttering and depersonalizing. This helps buyers visualize the properties as their own without distractions. A neutral and welcoming environment plays a key role in helping buyers imagine their home as their own, increasing the likelihood of a successful sale. Staging the living room was found to be the most important for buyers, followed by the primary bedroom and kitchen. Home offices are a must-have for many buyers, making them a valuable feature in staging. Turn a spare room into a stylish workspace. Place a desk by a window for natural light and a bright vibe. Use a neutral color palette to make the space feel larger and universally appealing. A well-designed home office can be a major selling point. Show buyers its work-from-home potential while increasing the property's value. Showcasing a home's best features creates a lasting impression. Use natural light to brighten the space, add depth and ambiance with layered lighting, such as overhead task and accent lighting. Place furniture strategically to showcase the property's best features like a fireplace or a great view, drawing buyers' attention. This approach ensures the home looks its best. Now imagine you're walking down a busy street filled with shops. One store has dusty windows, outdated signage, and cluttered displays. You might glance at it, but you're unlikely to walk in. Next door, its windows sparkle, the sign is fresh and modern, and the display is beautifully arranged to highlight the products inside. You pause, intrigued, and step in. Home staging is about showcasing a property's best features, capturing the buyer's attention. Like a great storefront, it draws in people, highlights potential, and excites them to buy. Home staging is a highly effective strategy that helps properties sell faster and at a higher price. 81% of agents indicate buyers can envision the property's full potential when staged. Buyers are more willing to overlook other properties' faults when viewing the staged home, and typically linger in a staged home an average of 40 minutes compared to 6 minutes in a vacant property. This translates to staged homes selling faster. As a top-tier example, a median-priced unstaged home normally averages 83 days on the market, but a staged house averages 7 days on the market. In my career, I'm proud to say that most homes that I've staged have an average selling time of under 15 days. 85% of agents reported that staged homes increase the dollar value by 1 to 5%. Home staging delivers a strong return on investment. At Stagemasters, we provide a range of home services tailored to fit the need of both the homeowner and realtor. Our most budget-friendly option is consultation, where we walk through the property and provide a checklist of recommendations for the client's listing. For homes that are still occupied, we use homeowners' existing furniture and decor to enhance the space as needed. We then add select items from our inventory to create a polished look. For vacant properties, we fully furnish the space, creating a warm and cohesive design, helping potential buyers see the home's full potential. And finally, we take care of all the logistics, making things as stress-free as possible for the realtors. From key management and elevator bookings to coordinating moving services and ensuring smooth communication, we handle all the details so you can focus on what you do best. I'm here to make your jobs easier. Thank you for your time and interest today. Does anybody have any questions or comments?
We'll hold the questions for a sec. So I should have done this at the beginning.
Okay.
Tell us your background.
So I was at home with my kids for most of the time. I kind of raised 4 kids, and then once they got older, my youngest went homeschooled. So I decided while he was homeschooling, I would do my interior design diploma, do my home staging, and then I just kind of got into it from there. And now they're older, so they're more independent. They don't need me the same way.
Child labor now, and they move.
Totally. Yeah, they like to be treated like adults, or want to be treated like adults, but still taken care of like kids.
Yeah.
So,
And then you said that you staged. So do you have your own furniture, or do you rent furniture? How does that work?
So we have a warehouse in Coquitlam that has a full set of furniture from decor pieces, artwork, sofas, bedding, everything you can imagine. That's where we do all our sourcing for our projects.
Okay. And why did you call us?
Because you responded.
Yeah.
But I also need Chantel, so it was just kind of something that I wanted to do.
Oh, okay.
Yeah.
All right. Well, that's one of the keynotes, guys, is, I gotta get in here. Don't get too close. Is you get messages in different formats, from WhatsApp to Instagram to a normal message, email. Make sure you reply, right? Sometimes you get weird messages, but just make sure that you reply to see if the person's real. Get them on the phone and have a conversation, because I was pleasantly surprised when we met,
Yeah.
right?
Oh, thank you.
And I get a lot of solicitation calls, but it's, not everybody gets into the door, but that was a wow, and I really appreciated it. So,
Thank you.
anybody have any questions to start? Atlas, I was talking about your conversation about your listing coming up. This is the home stager that we talking about, okay? So you guys should have a chat after. Does anybody have any questions in regards to?
More just a comment
Yeah.
quickly. So I would suggest that you all get connected with Christina on Facebook. She's posting some amazing things every week about some of the work that she's doing and how it actually transforms a space for buyers and sellers. I mean, it's a really nice touch. So well worth getting on her page.
Do you have sort of blanket pricing that you can say, like what a 1-bedroom might be? Or
So for a vacant 1-bedroom, it's usually starts at about $24.95, depending on how big the place is and how much furniture is required. It might be a little bit more or less. And that includes move in and out, furniture rental, as well as the staging fees. And a 2-bedroom is approximately $28.95
And that's per month, right?
per month. So that's for the first month, and then the second month, you're only paying for the furniture rental, so it can, so $24.95 the first month, it goes down to like $1,100 the second month.
Have you ever done rental properties?
No, I haven't,
Ooh. Might
but
be,
that would be cool, actually.
yeah.
Yeah.
Is there someone that has a vacant suite that they want to stage it up a little bit better,
Totally.
get the most money for it?
Yes, absolutely, that would be a good idea.
Anything online, Angel?
Do you guys have any questions in here?
Can I ask one?
Yeah.
If I sent you some pictures of a blank, like an empty space, could you kind of give us an idea what you can do with that?
Absolutely, absolutely, yeah. So, and I mean, it's always best to go to the property and look at it, but pictures are just as good. And I kind of give you an idea of what you need in the property and how much it would cost.
Yeah, there you go.
Yeah,
Great.
awesome.
Anybody else? Yeah.
You mentioned that neutral tones are the more universally liked style, but I was wondering what's like your favorite style to design and showcase?
I definitely like modern, up-to-date kind of trends. I am big on grays and creams and blacks. So that's just kind of like my most go-to style, and it's very neutral, so it kind of just works with everything.
And I love the consultant side of it, because when Heather and we sold our house in North Van, I forget who recommended, but we called a restager. So they use your own furniture plus bring in some other stuff, but it's either Heather and I were gonna beat each other up and pull our hair out and argue about what needs to be done. But when you get someone that comes in and just makes it so simple, and then we just go, okay, we'll follow the direction, and we did what was asked. And it worked out perfect for us. So don't be the bad guy. She's the bad guy. Let her come in and do her consultant and stuff. It's gonna cost a couple of bucks, but I tell you, it's way worth it. It's way worth it to have somebody else say something that you were going to say. Puts a little bit of a different authoritative
Absolutely.
into it as well.
And after the consultation, I usually always make up a homework list, which I would send to you, and then you can forward to your clients.
And you got some good. So tell us what you got.
Okay, so I've got a complimentary consultation.
Everybody got the card in here? If you don't, put it
Just
in.
put your name cards in or write your name down if you don't have a card. And then we have some wine and a really nice candle and
Booze.
so yeah, booze and coffee.
Booze and coffee. Yeah, in that order. So does everybody have their card in here? Robbie's digging it. Thank you. Okay,
Another one?
all right.
One last question.
Yes.
Do sometimes, because I often have clients or buyers look at pieces and they're like, is that for sale, or can I buy those pieces?
I don't have a card, but I'm doing it.
Totally. So there's a lot of times we'll have people that like say, hey, I just love this and I want to buy it all.
Yeah.
So we will sell the furniture to the client.
Okay.
So which gift do you want to give away first?
I think the person that gets their card picked first gets to choose and then.
Okay, but you gotta pick one.
Okay, I got
Okay.
it. Okay, ready?
Yeah, I'm ready. What's the gift though? They get a juice.
We get to choose.
They get,
Oh, okay.
okay. Serena,
Giglio.
yes.
Hey. Come on up. He's gonna go for the booze.
Are you gonna go for the?
No, I have too much booze at home. Wow, you can pick for me. You can pick for me. I don't mind.
You know, you choose. There's coffee and nuts, and then there's the consultation or there's choice of wine.
I'll take this one.
All
Okay,
right.
so make sure you.
Now you gotta pick.
I get to pick?
Yes.
Oh, we have one more winners. More than one winners.
Taryn. Come on up.
You think you brought your card, okay?
You gotta come and you gotta come. Was there a question? Did you say that?
No.
Gotta pick first.
We have more than one winners, you guys. If you had come into the office, you would have win some.
Thank you.
All right.
You're welcome.
Oh, yeah, go.
Oh.
Pick my name. Oh,
Robbie.
Robbie.
Okay. What are we down to?
Down to the last three.
Ooh, I will take.
Yeah.
All right.
Karen.
Karen.
I'm gonna take the consultation.
Let's take it.
Oh, it's taken,
Yeah.
okay. And I'm gonna take coffee, I think, yeah.
All right.
Thank you very much.
Last one, guys.
Holy smokes, you got a lot of things.
Yeah.
Wow, you gotta come back more often.
Indiana. There you go. All right. Well, thank you so much
Thank
for
you very much
coming
for
in.
having me.
All these cards are yours.
Awesome, and if anyone have any questions, I have some pamphlets here.
Yeah.
Wait,
Right, I might have missed it. Is there a fee for your consultation just to meet with people?
so the fee, it's usually about 45 minutes to an hour and it's $150.
Okay, thank you.
You're welcome.
And it's worth every penny.
For sure, and I got some pamphlets here that I've left, so if you guys are interested in a little bit more information or contact, you can definitely reach out.
Okay, well, thank you so much.
Thank you.
Great to see you
Yeah,
again.
absolutely.
We've got about a 5-minute break before Ken shows up. So if you want to stretch, have a muffin, grab a coffee or something. Our speaker at the end of the month is going to be Cameron Van Clyde. Good friend of mine owns Century 21 Creekside, and he's going to be doing a 1 hour and change kickstart to get ready for 2025. Cameron and I have gone back for a long, long time, and he's running these programs not only for Century 21 Canada, he's going down to the US to their top teams. And he phoned me the other day just to ask if he could come in and say hi. He was going to be downtown anyway, so he's doing us a favor. You don't want to miss that one. Absolutely don't want to miss that one. And then I'm going to have a friend of ours as well, Sharon Matsumoto, who works for a few developers. She's going to come in with some special development announcements and some hints for you guys on what to do in the pre-sale and assignment business. But more importantly, there's some product out there that's really close to where we are here that you guys don't want to miss. So go stretch your legs. You in social media land, you do it too, and we'll be back in about 5 minutes. Okay, thanks. Christina, thanks again for coming in. If you don't know the man, Ken Pazder is an amazing real estate lawyer, and I've always recommend always have a lawyer at your customer's side because they're lawyers, and he's the best.
The best of the
Without a
best.
doubt, the best. If you ever need help regarding a real estate contract issue, give him a call. He'll answer your call. He'll let you know. But he's always looking for business. So please get your customers to use Ken. And Ken's going to talk about today about another new tax, the home flipping tax.
Yay.
He's going to talk about GST. GST wasn't a relief when they said you'd have to pay for it on beer and wine and stuff like that for the 2 months. So there was no real estate GST. Right? And something about a new contract. What was that?
Well, just in your new contract, that's changed for GST.
Okay, so guys, welcome Ken to the team. Thank you, Ken.
It's right over here, so.
It's good here.
More.
Before it's further. Stand here.
Yes,
Yeah,
that's
it's
good.
bad, so I feel like I'm kind of
You're good.
gun here.
Yes. Thank you.
Okay, well, I hope everyone had a nice Christmas and New Year's, and everybody's good to go for a successful year for this year. So just further to what Michael was saying, yeah, if you guys have a question, you can always call us. You can email me. I hate to say this, but if you email me on Sunday afternoon, you'll probably get an answer Sunday afternoon. Or you call me on Friday night. So my card has got my cell number on it and my email. I would just say, just don't send me a text because I get so many texts now and I can't figure out where they're coming from because your name is not on the text.
Mm.
If you send me an email, I'll always return it. Or if you leave me a voicemail, I'll always return it. So bottom line is, guys, as realtors, you can see this happening. Every time we turn around, there's another law, there's another rule, there's another something for you guys to know about. And so, I mean, your job is to buy and sell homes for people, but it seems that's almost a sideline now. And the rest of the time is just complying with laws and rules. So just a couple of things I'll mention. You probably have seen your new real estate standard contract. If any of you have come to these things that I've done for the last 10 years here, we've said put a GST clause in your contract. Okay, so for the buyer, property includes GST if it's applicable. Well, finally, after 10 years, the real estate board has decided to put that contract in your in your standard contract on page 1. So your contract, for any of you who haven't read it lately, it says the property price includes GST unless you say otherwise. Okay, so that's what we've been telling you to do for 10 years. But from our now point of view is you have to be aware from the seller's point of view. Okay, before that clause protects you as a buyer, but it doesn't protect the seller. So you got to ask the seller, well, is there any chance there's GST on this thing? Because the way the contract reads now, it's included in the price. Okay. So certainly if you're writing up a contract on a new purchase, obviously you're going to cross that out. If you're going to write a contract on, maybe something that was used for Airbnb and it's commercial use, maybe you leave it in if you're a buyer, but you take it out if you're a seller. So again, always check with your seller if there's any issue on GST. It's included in the price. You can always cross it out. You can say, no, it's not included in the price, but you have to do something. So otherwise now the default is it's been lumped onto the seller. Before the default used to be, it was on the buyer. Okay. So again, like anything else, clients don't know anything about this. So if you don't point that out to them, if you don't know and they don't know, just say, well, phone your lawyer, phone your accountant. Generally, accountants are pretty good on this stuff. So just from that point of view, that's big change to your contract for this year. Again, the contracts change a lot faster than what they ever used to before, but that's something to be aware of. Now, this particular tax, the BC anti-flipping tax, came into effect January 1 this year. And it's too bad we have the same government because the other government wouldn't have passed this, the Conservatives, but these guys are in power again for 4 more years, so we have it. So what this particular tax does is it puts a 20% tax on your profit. If you make a profit and you sell a property within 2 years from buying it. There is another tax, which I hope you guys all know about, called the anti-flipping tax. That's a federal tax. Kind of does the same thing, but it's a little bit different. Is anybody aware of that tax?
Yeah.
Okay. So that, if you guys talk to your clients, people used to have this idea that if you held a property for a year and then you sold it, you could sell it as your principal residence. And it was kind of like this unofficial 1-year rule. There never was such a rule, but everyone seemed to think there was. And so the federal government has decided, okay, well, everybody thinks that, we're going to put that in as a law. Forget a rule. It's now a law. Since January 1, 2023, if you sell your principal residence within a year, you will pay full tax on any profit. Okay, so not capital gains. This is federal.
How much percent? No,
No percent. It's just taxable.
okay.
Profit is taxable.
The whole price or just the lift?
Well, the profit, just the profit. So you bought it for $1 million, you sell it for $2 million, you're going to pay tax on $1 million minus, your real estate commission. And you can write off the extra expenses off the profit, but you're going to pay tax on the profit at your marginal rate. So let's say your marginal rate's 50%. 50% of that's going to go into your income. You're going to pay tax on it. Sorry, so the whole thing is going to go into your income. It's not a capital gain. It's just pure income. Okay, so this was put in January 1, 2023. Almost no one knows about it. Okay, so it's a 1-year rule. So after 1 year, that tax goes away. Okay, and it has some exemptions. Like if someone died, if someone got divorced, if someone went bankrupt, if someone got relocated, they call it an eligible relocation. You got your job moved from here to Calgary, for example. Those are things that you could claim an exemption to say, well, yeah, we made like 50 grand, but we fell into one of these 3 or 4 exemptions. And the federal exemptions, actually wrote them down here, are death, divorce, serious illness, disability, job loss, insolvency, or an eligible relocation. So if any of those things happen, you had to sell your house, you can be exempt from the federal law. But now there's overlapping laws. There's now this BC flipping tax, which applies on top of the federal tax. So again, it's like City of Vancouver. You have the empty homes tax and you have the speculation and vacancy tax. They both apply to the City of Vancouver. Okay, so the bottom line is this is the same thing. Now we have a flipping tax for BC and we have a flipping tax federal. So, but they both apply to BC. So this particular tax is interesting in that taxes are generally supposed to be what they call prospective, which means that you put them into effect today and they apply into the future. So something you did tomorrow or the next day or next year is going to be caught by this tax today. This particular government here in BC seems to like to do this retroactive effect. So they've made this tax retroactive for 2 years. So if you actually bought a property in June of 2023 and you sold it now and you made a nice profit on it, you're going to pay tax to the BC government. Even though in 2023, this wasn't even on the books, this wasn't even being discussed in 2023.
We did that with the foreign buyers tax too, they just jammed it.
Well, they give you a week though. On the foreign buyers tax, they actually had, it was prospective, but only for a week. So you had to get that deal closed in 7 days. This one's worse because it goes backwards. So there's no reason for that. They could have made the tax effective today, January 1 this year, and said anybody sells a property beginning January 1, you had to buy it after January 1. This tax applied. No, we're going to go backwards 2 years. Okay, so the interesting thing about it, just like the first time home buyer's exemption, when it reaches $830,000, it continues, but it keeps getting smaller and smaller and smaller till it gets to be $860,000. Well, this is the same thing. For the first year, it's 20% on the profit. Second year, it declines. So by the end of year 2, it's 0. Okay, so as if that's kind of some benefit. So as I say, the interesting thing is, there, other than just to get extra money, there's really no reason this thing should be backwards. No reason this should apply to a property you bought last year, but it does. So we're kind of stuck with that. So I don't know about you guys, but I somehow the 1 year thing is enough. If you think about flipping a property, you buy it, maybe sell it in 3 months, 6 months, that's a flip. Maybe you could stretch it out to a year. I don't think anybody considers flipping a property after 2 years as a flip.
Yeah.
Really? A 2 year hold, that's quite a bit, but BC government does.
Does that apply to the pre-sales as well?
Yes.
Wow.
So pre-sale, if you bought a pre-sale last year and you sold it, again, the date you signed the contract for the pre-sale. Well, and they're not totally clear on this. They say, well, it's the date you signed the contract or the date you paid you quote unquote paid for it, which they're considering that you paid the deposit. Because generally on a pre-sale, you buy it today and you give the deposit in a week because there's a 1 week rescission period. So generally, the developers don't bother collecting the deposit until your last day. They start going to terminate the agreement. No, okay, give me the deposit, firm deal. So that's the day of that these guys would consider if you flip a pre-sale contract, when did you buy it? Okay, if you assign it to somebody and they buy it from you when they pay for the assignment, that's their day of purchase. Okay,
But you don't pay on that lift on the assignment, right? Because that's not transferring a title.
yeah, no, you pay on the lift for sure. Because that's caught by this act.
Yeah.
So in other words,
So when it's under
property,
contract is as well, it's going to be taxed as well.
uh,
Double tax.
yeah, it could be double tax, but the fact is, yeah, you could pay also a capital gain on that, or you could actually pay income on it to the federal government. But that's a different, like that's the federal government taxing your transaction for a flip on a pre-sale. And then now the BC government's doing the same thing. So can you pay double? Sure. Of course, you can pay to one level of government, you can pay to the other level of government. So this is why it's getting to be like a minefield in terms of figuring out what the heck is this going to cost me to flip this contract. Okay. So,
If the property is under corporation name, is it still, taxable?
no, it's still taxable. It might be deductible. You'd have to talk to your accountant about that, but corporations are caught by this, partnerships are caught by this, and individuals are caught by this. So you can't just say, well, my company bought the pre-sale, it's exempt. No, it's not exempt.
No, I mean, about anti-filipping tax.
About
Anti-filipping tax.
anti-flipping tax.
Yeah. If you buy the property and sold it less than 2 years, and the property is under the corporation name.
Yeah, you're still gonna pay tax.
What if you just sold the shares of the corporation?
Well, you'd probably be okay.
Probably.
Holding on, I wasn't sure. What I was wondering is, for the anti-filipping tax, you pay 20% to one government. Okay, does the profit get added to your income tax before or after the 20% is taken?
Well, I don't think anyone knows that because this one just came into law literally 2 weeks ago. The federal tax, the federal profit. So again, just get this in your head. You sell a property federally now, within a year, you make a profit, you're paying full income tax on that profit. So like there's no exemption whatsoever, whatever it is, you're paying tax. Now, could you write off the commission? Could you write off the legal fees? Probably. In which case your profit would go down, but you still pay tax on that different profit at whatever your marginal rate is. So what does that mean? That income goes into your tax return next year as if you made it as a commission on real estate. You're just paying tax on it. There's no exemption. There's no capital gains. Now, could you deduct the 20% that you're getting stuck from the BC government off the federal tax? Beats me. Maybe you could certainly try.
20% comes from the gross profit then.
That's right. 20% is, well, no, 20% is on the net profit on BC as well. So the BC, again, you could write off the real estate commission, the legal fees. Interestingly enough, you can write off the appraisal and the survey and the inspection, which is curious because those are normally caused, the buyer generally pays that. Like what seller gets a building inspection? What seller gets an appraisal? What seller gets any of these things? Those are generally buyers, but the government thinks, well, no, you could write that off. Well, you could only write it off if you paid for it. Okay, so you can't write off someone else's expense. But to your question, that's a good question of whether you could, if you got stuck paying both taxes during the first year and you say on the federal side, well, I got stuck paying 20% to the BC government, I want to write that off on my federal tax because it was a cost to me. And then could you do it the other way around too? On the BC side, say, well, I had to pay this federal income tax. Could I write that off? I don't know. You'd have to check with an accountant.
I think I heard that the BC anti-flipping is payable in 3 months. Is that correct?
Well, you have to file sometimes you have to file a return. You have 90 days to file a return. Sometimes you have to file a return, sometimes you don't. So you sell a property today, your lawyer is not going to collect the tax today because that's not part of the transaction. But for certain transactions, you have to file a return with the BC government within 90 days. Okay, so let's say, for example, one case, you've owned the property for 3 years, you don't have to file anything. You just carry on, do your thing. You own the property for 1 year, within 90 days, you're going to have to file a return. And there's a prescribed return. It's kind of like an income tax return with a bunch of stuff you have to fill in, file it with the BC government and claim an exemption or not. If you don't claim the exemption, you have to pay the tax. And there's a formula to calculate the tax.
We have a question online. Is the tax 20% or 20% of the profit is taxable?
20% of the profit.
20% of the profit. Thank
Yeah,
you.
so 20% would be terrible, but 20% of the profit is still terrible. It's your profit. Why should there be any tax? You're probably going to have to pay income tax on the profit anyway to the federal government. Okay, but now you're going to actually pay some extra money to the BC.
It would be in the negative if everything worked out.
Well, as I say, here's an interesting stat because you kind of say to yourself, when you put in a new tax, why? Why are you putting this tax in? So CBC, of all places, wrote an article about a week or two ago, and they said, well, what's the big deal about flipping property in BC? And their analysis came up with the fact that 2.3% of properties are flipped within a year. 2.3.
Is that percentage on the transactions flipped or the amount of money that's been exchanged?
No, on the number of transactions and people who bought a property and sold it within a year. In this case, it's 2 years, but 2.3 is not a lot. It's not 23%. It's 2.3%. So you're putting in new tax to stop something that almost doesn't exist. So new layer of red tape, new bureaucracy, new whole set of regulations to stop something which virtually is not a problem.
And what is CBC? Yeah, it's okay. What is your conclusion?
Well, they just wrote an article. They didn't say it was good or bad. They just said, well, it's 2.3%. And there's some other articles that you can look up on Google as well that are kind of in the same ballpark, but it's very small. It's a small amount of people flipping properties. And if you took out the exemptions, because there are exemptions in the BC Act as well, like divorce and death and bankruptcy and foreclosure and this, that, and the other thing. then if you took those out of the 2.3%, I mean, you probably have them next to nothing. So look, why do you have a tax? Anyway, it's there, we have to deal with it, but it's curious that you would put a tax in to solve something that's not a problem. But it looks good if you're trying to get elected. This thing was floated about 6 or 8 months ago before the election in BC. I think because they felt, okay, we better show like we're trying to fix the problems of housing in BC. So if you remember when the NDP was elected in 2017, they had a 30-point housing program to make housing affordable and rents affordable. How's that worked out since 2017? You guys are in the field all the time. You know it hasn't worked out. So they come along with stuff like this, which is the anti-flipping tax to fix a problem that doesn't exist, but it looks good. So so when they talk about what's a sale or disposition of property for this particular tax, they mean that you are selling the property for something, for some money. So for example, if you give a gift to someone, you give your property to someone as a gift, that's not caught under this tax. Because there's no consideration. It's free, it's a gift. You lease it to someone, it's exempt. If you move out of Canada, so when you move out of Canada and you become a non-resident, there's something called a deemed disposition, which means you're deemed to have disposed of all your property at the fair market value and immediately reacquired it. That would be exempt here. So if you
With this part,
sorry,
the last part of the new resident. So if somebody moves out of the country, but he still has some properties in the country. In that case, if they decide to sell, they're exempt.
no, it just means that the government, it's sort of like when you die. If you die, you're deemed to have sold all your property at fair market value and instantly reacquired it at fair market value. So if you bought it at 100,000, now it's worth 200. You're deemed to have sold it and reacquired it at 200. So you've triggered a capital gain for your estate. Same thing with if you move out of the country, you become a non-resident. If there's a deemed disposition on certain properties that you own in Canada, you're deemed to have sold them, even though you didn't sell them, but now you got to pay the tax on them. Okay, so in this case, they're just saying for this particular tax, that wouldn't happen. So big deal. So the thing is, this is something you guys don't have to, all this stuff I'm saying, I mean, I'll put this article on our blog, on our firm website, but you don't have to remember all the details. Or as a realtor, you just have to know there is this tax now. It is in force. It is in force backwards for 2 years. And it's a 20% tax on your profit when you're selling a property. Okay, so that's kind of the nuts and bolts. I mean, there's all kinds of rules. The thing about these taxes, I don't know who actually thinks up these various sort of what I would consider traps. Yes.
I have a question. Does this apply on leasehold and First Nations land?
First Nations, no. Leasehold's not clear to me. I would say probably yes, like say UBC leasehold, something like that. First Nations, no. They seem to be exempt from pretty well everything that gets passed now.
Thank you.
And there is a section in there about certain areas, certain things that are exempt. You can be the
city leasehold.
I think city would probably be caught. City, province, First Nations, probably no.
Loss and leaseholds?
That's a good one. I don't think that's covered. I believe there is a section in here somewhere. I'd have to look it up, but I think that may be exempt.
Sorry, if you sell your property in loss and then do you get any credit
No.
regarding the?
That's on both acts, the federal act and the BC law. If you sell it and you lost money, you can't write that off. See, and again, that's a complete, how can I put it? Departure from the rule of if I'm going to tax you on the profit, you get to write off the loss. That's been the case forever. Yeah.
Question, so if you spend 50K to flip your property and you got 100K lift, you're getting taxed on the 100 regardless of spending 50 and making.
No,
100?
you can write off
Okay.
the expenses related to making the flip.
Okay.
Which would be, let's say, maybe you renovated it, maybe you pay a real estate commission, you pay a lawyer, you can write those off. So it's kind of like your net profit, because really that's what profit is it's what you pull out. But it's just one more way of taking money away from you. Because why should you pay that profit now to the BC government? You're also paying profit to the Canadian government. So as I say, the whole point, they call it anti-flipping tax because, you know, it sounds good because we're stopping flippers, but there aren't really very many flippers. So this is, they're stopping something that doesn't really occur very much. Interestingly enough, they've got a potential deduction of up to $20,000 for your primary residence. You flip that and you lived in it for a year. You actually deduct $20,000 off the tax that you were going to pay, which is interesting. See if there's anything interesting else that you guys should know. As I say, it's just the fact that you know it. Should you mention it to your client? That's an interesting question. If somebody wants to list their property. I don't know the answer to that. What do you think, Michael? Doug?
Well, you should say, you know, check with the lawyer, check with Ken.
Should you even tell them that this tax exists now? I want to list my property.
Yeah, you gotta put your own spin on it to, it's there to penalize the home flippers. The guys that are doing this in and out. We all probably know a couple of them over the years that go in and buy a house and then renovate it, and then they say they live in it for a year and then they don't pay tax on it and they're treating it like a business. Right, so I don't really see a big problem with it other than the explanation of it. And it's all politics right now.
Sorry, my brain just like, what was the last thing you said, that 20% off if it's your primary residence? Sorry.
Oh, no, there's a section in here that says you could write off up to $20,000 if you sold your house and it was your primary residence within 2 years, but you had to have lived in it for at least a year.
Oh my.
So you'd say you get dinged with $40,000 tax, you could write off $20,000.
Is that a provincial write-off or?
No, it's BC. This is under the
Yeah,
fact, but why they put it in there is just a mystery.
I was just reading that as an exception, if you are a developer, let's say a contractor, then you are carrying on, you buy the property, you're carrying on a substantial kind of renovation, you are exempt.
You are.
Okay.
So property developers are generally exempt. If you as an individual bought a house and you substantially renovated and resold it, you're exempt. If you add up to double the habitable square feet in the house, you're exempt. But you're not exempt from the federal law. You're exempt from the BC flipping. So you still might have to pay capital gains, or you might even have to pay business income if, like Michael said, you're doing this too many times. You're treated like you're just buying and selling houses and renovating them. You might be exempt from this law, but you get caught by the federal law.
And that was a write-up that just happened where they found somebody over the last 5-6 years that did 7 houses. So they had to pay $1.5 million worth of back taxes, right? But if you're running a business and you're running 3 businesses, your business always gets taxed. But it's for the sneaky people.
Well, yeah, you probably all know clients perhaps who, as Michael said, you buy a house, you renovate it, you live in it for a year or maybe 2 years, and then you sell it, you keep the profit because you say it's my principal residence. In fact, I had a client who did this. I'm not sure if I mentioned to you a number of years ago. He was doing this every year. And he actually went on a radio show and said, this is what you do. You buy a house and you flip it after a year. And someone recognized his voice and they called CRA and they reported him. He got audited and he got taxed on the last, like you said, Michael, this was about 3 or 4 transactions in a row. They taxed him on the whole thing.
Well, this guy's my voice angel.
Exactly. So he basically, he got dinged with about an $80,000 tax bill and he appealed to the federal court, because when you don't like something CRA does, you can appeal their decision to the federal court. He lost there, and then he appealed it to the Federal Court of Appeal, and he won. And he reversed the tax and said, you don't have to pay any tax. He probably had that amount in legal fees, though. And they said, well, you were a school teacher, so you're not really a realtor, you're not a developer, you're not in the business. So that was what they hung their hat on and said, well, we're going to say you didn't do it as business. But this has always been the law. This is apart from these flipping taxes. It's always been the law that if you buy a house and renovate it and you do it too many times in a row and within too short of a period of time, the government can say, we deem you to be in a business. You're not buying a house to live in it and renovate it. You're buying it as basically a renovation business.
Well, I wonder, because they have that law now, 1 year, that guy would be okay to do that, because now they're putting a line on. The 1 year is the line.
Well, yes and no. See, the thing about the federal flipping rule is that if you are exempt from the federal flipping rule, you're still not exempt from the old rules, which is to say you're carrying on a business. Okay, so this is on top of what they already had. So I said they had enough rules in there to catch people from doing this. Now they're just saying, well, we don't even care what the reason is that you sold it in the first year, except if it's exempt, we're just taxing you. So they're just taking an extra step. So the old 1 year rule, you don't care. You're taxed.
1 second.
You all know is broke. We have a 1.3 trillion dollar debt. Federal government is paying $1 billion per month. I know, actually, yeah, per month. No, per week, sorry. 1 billion a week, which is $52 billion a year interest payments on the federal debt. 1 billion. BC government is paying 12 million a day. Okay, so both governments need money, and where is the big source of money in Canada?
Yeah.
Realtors.
See, real estate's a big thing to tap. And so far, your house has been exempt from tax. They cannot stand someone buying a house 20 years ago and selling it and making $1 million and they don't get any money. These taxes generally, unless you change the government, they'll just keep expanding. So 1 year becomes 2 years, becomes 3 years, all of a sudden it's 5 years, and you flip your property within 5 years, that's a flip. So again, the idea is just get your finger in the door, don't make everyone mad, and then just gradually expand it.
We have a couple of questions online. Does the provincial flipping tax stay with the property or the seller?
Seller.
The seller.
So it's not like the BC Vancouver empty homes tax. That is a tax that applies to the property. So if you sell it, you don't put the proper clauses in your contract, and that tax is payable. It's not caught with the tax certificate through the lawyer. Then the new buyer is going to inherit that tax. This one is a seller's tax, just like the spec tax. So I probably said this before as well, but do not bother to put a spec tax in your purchase agreement. Okay, you don't have to worry about the speculation tax. But if it's in the city of Vancouver, you want to put in your standard clauses about the empty homes tax.
Another question. If you buy a house for 700K and sold it in 6 months later for 1 million, if 20% of the profit is subject to the flipping tax, how is the rest of the profit taxed? Is it capital gains or something else?
Well, the rest of the profit, again, it would depend, because if this is your principal residence, so again, if it's principal residence, you sold it within 6 months, you made $300,000. Then the BC government would, and let's just assume the 300 is just pure profit, forget the exemptions or the deductions. BC government would want 20% of that.
20% of the 300K.
Right. 20% tax on that. That's a lot of money. Now, you might also have to pay the federal tax, because of course that would be fully taxable, $300,000, because that would be considered income to you. So you're going to pay income tax on 300, and you're going to pay an extra 20% to the BC government.
So is it both taxes are both on the same 300? So
Yeah. Well, see, that was what Robbie was wondering. Could you say one's a deduction to calculate the other one, and then the other one you say, is that a deduction to calculate this as what we, something to reduce the profit? I don't know the answer to that, because this one is so new. Who knows? But you see, this is
Twice.
sorry?
It would be there to tax you twice on the same amount.
Yes, sir.
Yes.
Absolutely.
Yeah.
So you're paying 40% of
Yeah,
the
so
profit.
this is why I say, generally speaking, this is just a new tax revenue, new tax stream for the BC government. So, there's another one. Could you pay tax in both places? Sure, absolutely. So again, this is because I've said this before, I probably sound like a broken record to you guys, but you got to push back. You got to say, hey, look, government, that's enough's enough. You're overdoing it. Because we don't push back as Canadian citizens, the government just keep throwing on more taxes.
Well, we can join the states,
50%. Yeah, I'll actually, I'd vote for that myself, but this tax does not apply to float homes and it does not apply to manufactured homes.
Oh,
So there's a couple of things that just out of the blue, why they exempted those, I have no idea. It doesn't apply to commercial properties.
does it apply to land?
Yes, if it's residentially zoned land, yes. It's commercial, no. If it's residential and you've never used it for residential purposes, you're exempt. So you bought a condo in Yaletown, you used it as an office the whole time, you sold it within 6 months, it's exempt.
Even the federal one doesn't apply to commercial?
I don't believe the federal one applies to commercial. But having said that, if it's commercial, you're probably gonna get stuck with a capital gain or business income because it's commercial property.
Yes.
See, the big exemption for property has always been residential. Everything else you pay tax on. You own a commercial property, you sell it, you're gonna pay tax, at least a capital gain tax on it. It's the exemption for your principal residence is the one that's getting eroded with these extra taxes.
So how about the properties that have commercial on the main floor and then residential on top?
I don't think so. I think you're not exempt on that. I think, and for this particular tax, I believe if it's partially commercial, you're stuck. It's not one of these things where you prorate it. That's my initial take on it. If you had a case where you're selling a commercial property, then we take a close look at it, or like a half and half, one of those live work things. But again, the whole idea behind this is that, you know, they want you to hold the property for 2 years. But why? It's your property, it's your business. But similarly, as I say, once in a while, you'll have a case where someone buys a condo, uses it as an office. And so that is exempt from this. Okay, having said that, this is like a minefield. So it's exempt from this tax. Great, you sell it after 6 months, you make $100,000. Is it exempt from GST? No, because it's used for commercial purpose. So your buyer's going to pay GST. Okay, your seller's probably going to pay a capital gain, or he may have to pay full income because it's commercial property. So I don't know if any of you guys ever watched this series called Resident Evil. Anybody see that? No, it's like 4 or 5 series. This actress called Mila Jovovich. There's these cases where she's trying to get through a tunnel and there's all these laser beams all over the place and she's got to dodge through. This is kind of what it's like now. You get caught with this tax, then you get tripped up with the federal tax. Or here's an exemption on this one, but it's not exempt on the federal side. They have different rules. They never synchronize them, like they never harmonize them, so they're all the same. So for example, here's a question for you guys. How many years or how many months do you have to live together to be common law in BC?
1 year, 6 months.
6 months?
1 year?
2 years? 1 year? What's anybody's guess?
1 year.
1 year. Okay, what's 2 years? Okay. So you have to live together continuously for 2 years in BC to be common law. Okay, that could be 2 males, 2 females, male, female, doesn't matter.
Any non-gender conforming.
No, it has to be romantic.
It has to have.
Yeah, it has to be like a marriage-like relationship, whatever that means in today's
You're
world.
charging rent.
That's not romantic.
Gotta put in more work, I think, more time.
But interestingly enough, I have a case right now where a couple's splitting up right now. And they were together for 1 year. Okay, so they said, okay, are we exempt from this flipping thing because we own the property 1 year and we're selling it now? And interestingly enough, for this legislation, this is not the property transfer tax, this is not the family law act. For BC law, and under the flipping tax, it's 1 year. So we could claim an exemption for them because they were together for 1 year. Now, that's crazy because nothing else in BC is 1 year for common law. So this one is. This is why I say it doesn't make sense. The guys who wrote this didn't bother to read the Family Law Act and they didn't bother to read the Property Transfer Tax Act. So this is what makes it even more difficult because you're trying to comply with something and you say, well, you know, it's 2 years. Well, not for this one. And this is the same. I get it. You could say Alberta, maybe that's different, or something else. This is the same province. This is BC. So one piece of legislation uses 1 year. Most of the other pieces of legislation use 2 years. So it's just an example that it just gets more and more complicated to just do an ordinary garden variety regular real estate deal. So it just makes you guys' life harder. So if you have a question, you can always call us. We don't know the answer. We can always look it up for you. And like I said, 9 times out of 10, we're not going to send you a bill. It's just part of the service we try to provide. Yeah.
So just to be clear, if you bought a pre-sale in June of 2024
Mhm.
and you sold it in February 2025, you will be eligible for both taxes. So does the 20,000, sorry, the 20% needs to be paid to BC.
Mhm.
But then the net gain needs to be paid on the 2025 income tax?
Yeah, we see when you say net gain, like I said, I'm not sure if you could write off the BC tax on your income tax for the feds. Probably, I'd certainly try it.
But the federal anti-flipping tax needs to be added to 2025. not
Yeah,
2024.
that's the next, look, you're always a year, you're paying for the previous year.
Okay.
So, yeah, like I said, it's just become more challenging. It's just something to be aware of. And this, for you guys, like I said, you don't have to memorize this. You don't even really have to know all the details. Just be aware it's there.
Mhm.
And if you have a question, call us. Just to make your life more easy for 2025.
Well, thanks, Ken, for cheering us up.
You know what, you guys are all gonna have a great year. My feeling this year is gonna be good. It's not gonna be as good as the COVID years, but it's going to be good because the rates are coming down and people are just getting ready to say, look, we've been on the sidelines too long. I think you guys could probably have a good year.
Yeah,
Hope so.
I hope so too, and I believe so. So guys, here's my takeaway is lots of taxes. Terrible explanation of the taxes from our governing bodies. So read it up, make sure you give your customers something good to read and refer them to the lawyer that knows it better than you. We have a federal government that's always wanted to do capital gains tax, and they're trying to get in, and that was their first step in the first year. So be wary of that, guys, because we don't get the write-offs like the United States do. So they're coming in and they're trying to start with the little baby steps. They're coming in as well with capital gains tax on your income of 250,000 or more. I mean, they're trying to put a ceiling over our head. It's just wrong. It's you got a provincial government that's more politics than anything. And I understand what the taxes, like I said before, it's for those guys, those people that are going in that are developers that aren't registered, that aren't paying taxes, and they should pay tax. Right. And so good for them for recognizing it. But again, it's 2.3%, and probably half of them are exempt based on the rules. So it's a fine newt. So kind of explain it that way, but just make sure that you understand what you represent and you don't say something that's above your pay grade. You let these guys talk about it, whether they're the lawyers or the accountants.
Mhm.
So again, always a pleasure. Oh, and one more thing, guys. There's a lot of shit going down south of the border with that fire, and nobody knows what's happened. But if you have people down there, you know people, give them a phone call, reach out to them, tell them that you love them. Okay.
Okay, thank you, boss.
Okay.
Yeah, that's when we become the 51st state.
Yeah.